there's definitely a lot of action in the world of cryptocurrencies, and there's a split view on this. Is Bitcoin going to be worth $50,000 or is it going to be worth zero? No one really knows the answer, but Malcolm, you're in the middle of this firestorm of activity. There's a lot of exciting developments around cryptocurrencies. Coinsilium has an advisory business, you're doing token sales. All of this stuff needs to be regulated in some way, shape, or form. What do you think the regulatory roadmap looks like?
Regulation's coming. I think the big real question, I think, is how you actually view this sector. Is it blockchain? Is it cryptocurrencies? Where does one stop? Where does the other start? So I think the attitude towards regulation will vary depending on what lens you look at it through. So we look at everything through the lens of blockchain. Cryptocurrencies have come about because they've been enabled by this technology. We knew this was going to come along down the line. As you say, when you start going out and doing token sales and you raise on aggregate 10 billion, regulators are going to sit up and say, hang on a minute, what's going on here?
So if you set the stage there and you're in front of the regulator,
Yeah.
what's the primary messages you think they should be considering in terms of developing this framework?
We're quite close to, or we keep close to what they're doing in Gibraltar, and we sort of watch very carefully because they've, in that instance, and that's where our focus is in that jurisdiction, they're looking at building regulation from the ground up. So they're not looking at sort of what is and trying to sort of fit things into molds that aren't appropriate. They're saying they understand, or they made a point of understanding what this technology is about, what it can enable, and their regulation is built around distributed ledger. So that could be cryptocurrency exchanges, it could be companies doing token sales, anything where there's a transfer of value, not necessarily money, but a value or data may come under that regulatory framework, and with that regulatory framework gives companies like us and our startups that we work with a lot of certainty.
When you think about utility tokens versus security tokens, the nomenclature is thrown around very loosely. What do you think the regulatory framework should look like to distinguish utility tokens from security tokens? Or are they distinguishable?
Yes, I think so, but it's only come about because tokens were just tokens when they first started, and there was no framework to actually distinguish the two. So once it became apparent that certain startups were using the issuance of a token to raise funds, and you'd look at it and say, well, it's not actually a share in the equity, but it's, what's it doing? It became a little bit disconcerting. So that's when the regulator started saying, well, hang on a minute, if it looks like a share, acts like a share, and walks like it's a share.
It's a share.
If it's backing an asset, then it's a share. So they needed to get their heads around that first. And now the process is starting to move forward. It's starting to evolve. People are looking at it more clearly. So getting back to utility, that is a sort of a sweet spot. If you can actually fit that and you can demonstrate that it is not a security under the sort of Howey test, if you like, then you've got something you can use as in utility. It's
within
useful
an ecosystem.
Within an ecosystem.
Requisite members all have value associated with it.
Yeah. And we one of the most enjoyable parts of our role is actually finding that project, that startup that is actually got a really good utility. So that's what the buyers want, clear utility and a strong protocol.
Right.